Welcome to the Deep Dive, where we cut through the noise and get straight to the knowledge that truly matters. We're here to give you that essential shortcut to being well-informed, uncovering the surprising facts and key insights you might miss just scrolling through headlines. Today, we're taking a deep dive into some recent business updates from automobile companies. I've got a fascinating stack of reports detailing sales figures for June 2025 and, for some, the first quarter of the current fiscal year.
That's right. Our mission today is to really unpack these numbers, highlight the key performance indicators, and I think most importantly, uncover the underlying trends that are, truly shaping the Indian automobile sector right now. You'll gain a thorough understanding of what's shifting quickly and efficiently.
Okay, let's unpack these figures then and see what the latest numbers reveal about the road ahead for these major players. First up, let's look at Bajaj Auto. They've reported their sales for June 2025 compared to June 2024, and also their year-to-date figures for the first quarter, April to June.
Yeah, Bajaj. What's immediately clear here is kind of a mixed picture, which tells an interesting story about their market positioning right now. Overall, they saw a modest 1% increase in total sales for June 2025 compared to last year, reaching just over 360,000 units. But here's the insight, the really interesting part. Their domestic sales actually saw a 13% decline.
Oh, wow. 13% down domestically.
Yeah, while exports surged by an impressive 21%. So this points to a significant divergence between local market demand and, robust international appetite for their vehicles.
So a clear split, like you said, between domestic and international demand for Bajaj. Does that trend hold across their specific segments? Two-wheelers and commercial vehicles?
Absolutely. And it paints an even clearer picture, really. Two-wheelers, which are, a massive part of their business, saw domestic sales drop by 16%.
Okay.
Echoing that overall domestic trend. But exports for two-wheelers picked up by 18%. Now, for commercial vehicles, domestic numbers were largely flat, which is noteworthy given the overall decline elsewhere, but exports really shone. A huge 49% increase.
49%, that's substantial.
It is. This strongly suggests that Bajaj Auto's growth engine, at least for June, was firmly in their international markets, probably driven by demand in maybe emerging economies or specific regional opportunities where their value proposition really resonates.
And looking at the full quarter then, from April to June, did these patterns persist? Was June just a blip?
Well, for the quarter, Bajaj Auto's total sales were still up 1% year on year, maintaining that slight overall increase. Domestic sales were down 8% for the whole quarter, but exports continued their strong run with a 16% increase across the 3 months.
I see.
So no, it wasn't just a one-off June phenomenon. This export-driven growth seems to be a consistent theme for Bajaj Auto this quarter.
Okay, interesting. Yeah. Now, from two-wheelers and smaller commercial vehicles, let's shift gears a bit. Let's talk about Eicher Motors' VE commercial vehicles, or VECV. This covers their trucks and buses, a very different segment.
Right, VECV. For June 2025, they reported a slight overall dip, 0.8% in total sales compared to June 2024. However, looking at the bigger picture, their year-to-date figures for April-June 2025 show a healthier 9.7% growth compared to the same period last year.
Interesting. So a softer June, but a stronger quarter overall.
Exactly. It suggests that while June itself was maybe a bit sluggish, the overall quarter for VECV has actually been quite robust. A strong start to the fiscal year despite, maybe some recent headwinds.
Right. So how did their domestic and export markets perform for trucks and buses within that? Can we break that down?
Sure. Diving into the details, their total domestic Eicher trucks and buses saw a 2.5% decrease in June. Now, what's perhaps most significant here is the performance of their light and medium-duty buses, which were down quite a bit domestically by 13.5%. However, a real standout was their heavy-duty bus segment. That actually grew by a substantial 37.4% domestically in June.
Wow, quite a jump.
Yeah, it suggests some shifting demand within their domestic commercial vehicle portfolio, perhaps towards heavier buses.
And on the export front for VECV, how did they fare internationally?
Exports for VECV in June were quite strong, actually, up 13.1%. A particularly striking insight here is that their bus segment exports surged by a remarkable 72.1%.
72%.
Yeah. Demonstrating very strong international demand for Eicher's buses. Plus, Volvo trucks and buses, which is, a key part of VECV, showed robust 50% growth in June, even if that's from relatively smaller volumes.
Okay.
So this highlights a clear success story in their international commercial vehicle business, especially, it seems, for their bus offerings.
Okay, still sticking with Eicher, but now let's turn to their iconic two-wheeler division, Royal Enfield. I know many listeners are probably curious about how their classic motorcycles are performing.
Yes, Royal Enfield. This is where it gets really interesting. They posted a strong performance in June 2025, with total motorcycle sales up a significant 22% compared to June 2024.
22%, that's solid.
It is. And for the entire April-June quarter, sales were up 17%. But the real story, I think, for Royal Enfield's impressive growth appears to be their international business. Exports for June soared by an incredible 79% year-on-year.
79%. That's massive growth on the international front.
It really is, and it was up 65% for the full quarter.
So what do you think is driving such significant international demand for their bikes? What's behind that surge?
Well, it's likely a combination of factors, really.
Yeah.
Royal Enfield has been quite aggressively expanding its global footprint, establishing new dealerships and focusing on markets where their sort of retro-modern aesthetic and accessible pricing appeal to a growing rider base.
Right.
Plus, new models like the Himalayan and the Meteor have also been very well received globally, diversifying their appeal beyond just their classic 350cc models. Although it's worth noting, those classic models with engines up to 350cc also saw a 25% jump in June. So strength across the board, but international is really powering that headline growth. Their global strategy is clearly paying off.
Makes sense. Okay, next up, let's look at Hyundai Motor India. They recently shared their monthly sales for June and also their first quarter of FY 2026 performance.
Right, Hyundai. They reported total monthly sales of just over 60,900 units in June 2025. Looking inside that, domestic sales were around 44,000 units, and exports contributed a significant 16,900 units. For the first quarter of FY 2026, their total sales were approximately 180,400 units.
Okay, and what does that mean in terms of growth or maybe strategic shifts for Hyundai in India?
Well, a key insight here seems to be Hyundai's clear and increasing focus on exports. Their export volumes for Q1 FY 2026 grew by 13% year-on-year, reaching over 48,000 units.
13% growth in exports.
Yeah. And this has pushed their export contribution to total sales up to 26.7% in Q1 FY 2026. That's compared to 22.2% in the same period last year.
So more than a quarter of their sales are now international. That's a notable shift, isn't it?
It absolutely is. It indicates a perhaps strategic diversification of their market dependency, reducing reliance solely on the domestic market.
Right. Any specific segments performing particularly well domestically for Hyundai?
Yes. In the domestic market, SUVs continue to be, well, the dominant force for Hyundai. They contributed a massive 67.6% to their total domestic sales in June 2025.
Wow, over 2/3.
Exactly. It just highlights the ongoing consumer preference for this vehicle type in India and, of course, Hyundai's strong portfolio in that very popular segment.
And what's the company leadership's outlook? What are they saying, given these numbers?
Well, their executive director and COO, Mr. Tarun Garg, indicated that the geopolitical situation continued to affect domestic market sentiment in June, so acknowledging some headwinds there. However, they're cautiously optimistic about a gradual recovery in demand, supported by potential reductions in repo rates by the central bank and, improving liquidity in the market. They're also nearing the start of production at their Talegaon plant, which is an important capacity expansion for their future plans in India.
Got it. Okay, from passenger cars and bikes, let's turn now to Mahindra and Mahindra, a company with a really wide range of automotive products, SUVs, commercial vehicles, even tractors.
Yes, M&M. They announced an overall auto sales growth of 14% for June 2025, reaching nearly 79,000 vehicles, and that includes exports. This strong overall growth is really driven by a few key segments that are performing exceptionally well for them.
And I suspect I know one of them. How did their popular utility vehicles, the SUVs, perform within that?
You guessed it. Their SUV sales were a definite highlight and a major driver of their success. Domestic sales for utility vehicles surged by 18% to over 47,300 units in June.
18% jump.
Yeah. And what's particularly significant, quite remarkable actually, is that the quarter ending June 2025 marked the highest quarter ever for their SUVs.
Highest ever. Wow.
Highest ever. This clearly points to an incredibly strong consumer preference for their SUV lineup and, Mahindra's ability to capitalize on that demand with popular models like the Scorpio N, XUV 700, and Thar.
Right. Okay, beyond the booming SUVs, how did their commercial vehicles and three-wheelers fare?
Well, domestic commercial vehicle sales stood at around 20,500 units. There was some variation within that segments like light commercial vehicles, LCV, in the 2 to 3.5 ton capacity showed growth, while smaller LCVs, those under 2 tons, saw a bit of a decline.
Yeah.
Their three-wheelers, though, including the electric ones, saw robust 37% growth. That indicates strong adoption in that category, maybe for last-mile connectivity. Overall auto exports were up, but just a modest 1%.
Gotcha. And then there's the farm equipment business, the tractors, which is a major part of Mahindra's overall portfolio, right?
Yeah.
How did tractor sales look?
Yes, and here's where we see that fascinating connection to the wider Indian economy. Mahindra's farm equipment business reported very healthy 13% growth in total tractor sales for June 2025, reaching over 53,000 units.
13% growth in tractors.
And domestic tractor sales were also up 13%. Now, Vijay Nakra, who's the president of the farm equipment business, attributed this industry growth primarily to, well, healthy cash flow from the Rabi crop harvesting and, crucially, the widespread arrival of the monsoon.
Ah, the monsoon effect.
Exactly. He expects record food grain production and ongoing government initiatives to further boost tractor demand. This connection between agricultural prosperity and automotive sales, particularly for companies like Mahindra with strong rural links, is quite significant. It underpins their diversified strength.
That's a key connection, isn't it? Okay, moving to India's largest passenger vehicle manufacturer, Maruti Suzuki. What do their June 2025 sales figures tell us about the broader market?
Right, Maruti Suzuki. They sold a total of just under 168,000 units in June 2025. This includes around 121,300 units in domestic sales, about 8,800 units sold to other OEMs, basically other car companies that rebrand Maruti vehicles, and nearly 38,000 units in exports.
Okay, that's still a significant total volume. Were there any standout achievements or maybe challenges within those figures?
Well, a key insight here is the stark contrast between their export performance and their domestic challenges. It's almost a tale of two markets for them in June. Maruti Suzuki's exports reached an all-time monthly high. That's a major achievement and reflects really strong international demand for their vehicles, maybe models like the Baleno or Swift.
All-time high exports, okay. But domestically?
Domestically, it's a different story. The mini and compact segments, think Alto, Wagon-R, Swift, Baleno, traditionally their absolute strong suit and volume drivers, saw a combined decline of about 17.5% compared to June 2024.
17.5% down in their core segments. That's quite a drop.
It is. And even their utility vehicles, like the Brezza and Grand Vitara, saw an 8.5% decline domestically. This really raises an important question about the prevailing domestic market sentiment for passenger cars in June, certainly for Maruti's portfolio. It indicates some clear headwinds despite that record export success.
Right.
Overall, domestic passenger vehicle sales for Maruti Suzuki were down 13.3% in June.
Okay, quite a different picture domestically. Finally, let's switch to Tata Motors. We're looking at their total sales for the first quarter of FY26, covering both commercial and passenger vehicles, and importantly, their electric vehicle segments.
Yes, Tata Motors. They reported total sales of just over 210,000 units in Q1 FY26 across domestic and international markets. Now, this represents a decline of about 8.5% compared to Q1 FY25, and domestic sales specifically saw a 10% decline, so an overall dip in volumes for the quarter.
Right, an overall dip. How did their two big divisions, commercial vehicles and passenger vehicles, perform within that overall picture? Any differences there?
There were. For commercial vehicles, total sales were down 6% year-on-year for Q1 FY26 domestically. However, an interesting point is that their international business for commercial vehicles saw a robust 68% growth in volumes.
68% growth internationally for CVs.
Yeah, it highlights a clear strength in their global CV operations, perhaps offsetting some of the domestic pressures. Similarly, in passenger vehicles, sales were down 10% for the quarter domestically, but their international business for passenger vehicles also grew significantly by 54%.
Okay, so strong international performance for both CVs and PVs, even with domestic dips.
Exactly. That export focus seems to be a recurring theme across several players.
Now, what about the electric vehicle segment? That's such a rapidly growing and strategically important area for Tata Motors, right?
Yes, and the EV segment is indeed a bright spot, although the headline number needs a bit of unpacking. While their total EV sales for Q1 FY26 were slightly down by 2% year-on-year.
Oh, down slightly.
Slightly, yes. But this masks an important nuance. They saw strong momentum towards the end of the quarter. June 2025 EV sales actually grew by 12% over June 2024.
Okay, so finished the quarter strong.
Precisely. And Shailesh Chandra, who heads up Tata Motors' passenger vehicles and electric mobility, noted that the EV segment emerged as a significant positive in what was generally a subdued passenger vehicle industry overall. He suggested this was largely driven by the influx of new models across various manufacturers, increasing consumer choice.
Makes sense. Any other key takeaways from Tata Motors' outlook, maybe on the commercial vehicle side?
Yes, Mr. Girishwa from Tata Motors highlighted that Q1 FY26 was indeed subdued for commercial vehicles, echoing the numbers, but they anticipate volumes will improve progressively in the coming quarters. This optimism is based on a few things. Forecasts for a healthy monsoon, which we know impacts the rural economy and CV demand.
Right, that connection again.
Potential reductions in repo rates that could stimulate borrowing and demand, and a renewed thrust on infrastructure development by the government, which always boosts CV sales. They also recently launched new products like the Ace Pro mini truck and introduced air-conditioned cabins across their truck range, aiming to stimulate demand with new features.
Got it. Okay, maybe we should also quickly cover TVS Motors. I know they've had some significant recent updates that add another layer to this whole auto market picture.
Yes, absolutely. TVS Motor Company is quite a story this quarter. What's particularly striking with them is that they registered their highest ever quarterly sales, over 1.27 million units in Q1 FY26.
Highest ever quarterly sales.
Highest ever. And for June 2025 specifically, their sales grew by an impressive 20% to just over 402,000 units compared to June 2024. This consistent performance really speaks volumes about their market position and product demand right now.
That's incredibly impressive, especially given some of the domestic softness we've seen elsewhere.
Yeah.
How did their two-wheeler segments contribute to this robust growth?
Well, total two-wheelers saw a 20% growth in June, reaching around 385,700 units. Domestically, two-wheelers grew by 10%, and within that, motorcycles registered strong 24% growth, and scooters were up by 26%.
Okay, so healthy domestic growth in bikes and scooters.
Exactly. It indicates healthy domestic demand within key segments of their two-wheeler portfolio, despite some of the broader market softness we've discussed for other players in certain segments.
And how did their electric vehicle segment and international business fare? The iQube is quite popular.
Right. Their EV segment saw sales of about 14,400 units in June 2025. Now, that was actually a slight dip compared to last year.
Oh, okay. Any reason given for that?
Yes, and importantly, they attributed this dip primarily to disruptions in the EV supply chain, specifically concerning magnet availability, so a supply-side issue rather than purely demand.
I see. Makes sense.
However, their international business saw remarkable growth. Total exports were up 54% in June, and two-wheeler exports alone surged by 58%.
58% growth in two-wheeler exports.
Yeah. And their three-wheeler segment also grew significantly by 42%. So much like some of the other companies we've discussed, TVS is also seeing substantial momentum in its international markets, really boosting their overall numbers.
Wow. Okay. That was a truly comprehensive deep dive into the recent business updates from these automobile companies. We've seen some fascinating contrasts, haven't we? From surging exports for some companies and, strong performance in specific segments like SUVs and tractors even, to definite challenges in the domestic market for others, despite broader headwinds.
Exactly. What really stands out, I think, is that while several companies face domestic pressures maybe linked to broader economic factors, financing costs, or geopolitical sentiment, their international businesses have often shown remarkable resilience and growth.
Yeah, that export story is loud and clear.
It is, particularly in two-wheelers, commercial vehicles, and even passenger vehicles for some players. And that agricultural connection for companies like Mahindra and the CV players really underlines the diverse influences at play in this sector. It's not just about urban consumer sentiment.
So what does this all mean for you as someone watching the Indian auto industry?
Well, it clearly highlights a dynamic and frankly complex market right now. It's heavily influenced by both local conditions like monsoon patterns, agricultural income, and also evolving global demand shifts. The strategic choices these companies are making, whether it's focusing on expanding exports, doubling down on specific vehicle segments like SUVs, or investing heavily in electric vehicle innovation, these are truly shaping the future of mobility in India.
Yeah, and it makes us ponder, doesn't it? How will these companies continue to adapt their strategies in the coming quarters? How will they balance these shifting domestic and international demands, especially as new product launches hit the market and, economic forecasts continue to evolve? It's certainly a space to watch very closely.
Absolutely. And before we wrap up this deep dive, we just have an important disclaimer to share. We are not
SEBI registered financial advisors. The discussion today is purely for informational purposes based on recent business updates. If you are considering making any investment decisions related to these companies or the auto sector, please consult a certified financial advisor. Thank you so much for joining us on the deep dive. We hope this has given you a clearer, more informed perspective on the recent business updates from the automobile companies. Until next time, keep digging deeper.